Hey, folks, welcome back to the Pulse. My name's Matt. This is Crypto Heartbeat. It is 12 noon. It's high noon Central Texas time, and welcome back to the Pulse. Got a really important stream today. We're talking about real world asset tokenization, and it's really it's really taking PulseChain to the next level. That's the whole point of this, and really focused on the real vision long term for this PulseChain thing that we're in. You know, a lot of people are focused on this cycle and going, all right, when is it going to go up? When are we going to see this actual bull run we've heard so much about? And what I'm thinking about and what our team is thinking about are what's the long-term future for freedom and sovereignty in the world? And that's what this stream is really all about, because my desire is to really understand what's coming and what is the defense. We've got a leader in Richard Hart who understands the future. He understands what these globalists are planning. And if we don't think past this cycle, we're going to be in a world of hurt because there's things going on that seem really exciting. And one of those things is real world asset tokenization. What is it really? And what does it really mean? And what should we be doing as it relates to that? Because DeFi, decentralized finance, is a gift. And it's the true essence of why Bitcoin was created. The whole point of decentralization, this tool that we animate for good, is one that we believe can free the captives from debt and consumer slavery. And the point of it is that's where the hope is. It's not just in the speculative nature and, hey, I got a 10,000x. That's great, right? That's what's attracted a lot of people. But what's really the future look like? If we look across the globe, what do we see? The money is becoming digital. And what we mean by that is it ultimately all will be digitally documented on the blockchain. And we're going through this process, and that's where the opportunity exists. And I'm going to illustrate that point in many different ways of what's happening in the traditional financial market right now as it relates to real world assets. And it's something that not a lot of people talk about, right? We're really navel gazing and focusing on meme coins and where there's a little bit of, I would say, kind of crumbs that are falling off the table. People are looking at ways in which they can basically extract value from others. And if you really boil down what crypto looks like right now, it is ultimately a casino of speculation. It's one of gambling. That's why they call some people degenerate. But we know that that ultimately isn't sustainable and that things have to be based on like real stuff. Richard Hart's known for saying there's only really two things that exist in this world, and that's goods and services. Well, goods and services are really what we take proxies for our labor in exchange for. What is money if not a representation of your creative ability and your ability to either create a product or a service? And really, ultimately, it's value that you want. But if you look at speculative things, they inherently have no undergirding value. Because if you really boil it down, let's just take the current status of meme coins in the Pulse chain right now. Essentially, what it is let's get together in a group and let's have an advantage, or let's build a bot and let's front run people. Let's do arbitrage. But at the end of the day, we have a finite amount of money that's kind of getting shifted around. And everyone's hoping that Richard Hart makes moves with SAC funds and that's going to pump your bags. And even though those things may or may not be true, the fact of the matter is there's a bigger story that's happening here, and it's ultimately all the money going digital. And so I think we need to pay attention to what I would consider to be the evil empire is doing. What are they doing, and why are they doing it? And that's what we're going to be talking about today. And I believe that the information I'll share with you today will be enlightening to you if you don't understand about real world assets and how those are essentially being tokenized into crypto. But what we should be doing as defenders of DeFi, because ultimately we want to help have a truly decentralized, vertically aligned ecosystem that's an alternative financial system. And that's really the hope. Because when I'll give you a good example. When the Charlie 19 first came out, right? 2020, and everyone was fearful about this new disease. What happened? At the beginning, I think you were a reasonable person, as was I. And I'm skeptical, but I was also concerned about people's health, right? Heard about people dying, real people dying, and this unknown disease. And so there was a lot of concern. And I think that there were people that weren't, aligned with evil forces who were concerned about this. My doctor was concerned, people in our community were concerned. And so what started out as a health emergency, it created opportunity. And this is very common, right? When there's massive disruption, whatever it means, like literally disruption of you being locked down or having to be very cautious, creates this arbitrage opportunities in life. And so people will take advantage of those things. And of course, we see what's happened since then. We could get into a debate about that whole thing, but the origins of this, your thinking and my thinking, came from a place of concern, care, caution, I think sensible concern. But it ended up devolving into an opportunity for people to extract value. And so we find ourselves right now in this transition from an analog traditional financial world to a digital world. And, the casinos always existed. It just converted into another place. But ultimately, you're stealing from another person. And that's still an extractive model. The real hope that I think sensible people think about is, what is the real abundance model? Well, some technological things will have to change, but also we'll have to think differently about digital money, because the challenge is money's just a tool. And in the hands of people who are aligned with evil forces, ultimate means your enslavement. And I believe that on one end of the spectrum, what we're seeing in the traditional financial world and their desires for digital money, like central bank digital currencies, are ultimately will be even more enslaving than the current system. So what do we do? How do we do it? What are we thinking? Well, it says, without vision, the people perish. One of the great things about Richard Hart is he sees this future. He knows there needs to be certain infrastructure built in order for this system to truly exist as an alternative financial system. But that's the hope. And so I want to do everything I can to contribute to and support that strength of an alternative financial system. And so my personal feeling about the PulseChain, regardless of what the price chart says, is that we together are building the alternative financial system. That's the bottom line for me. So this is going to be an important introduction, because all of my focus is going to be shifting to how do we bring a tremendous amount of new liquidity into decentralized finance. That's the punchline. So there's your intro. Let's say hello to you, and then we'll get into the content today. This will be jam-packed with good alpha for you. If you haven't shared this out or you're not subscribed, please do that. I think this is a very important stream. I've prepared for it, and let's go. Sam Kemp, the irony of all irony is the message that you sent me was already on my mind. And so you were reading my mail or listening. Mr. Rock Jockey, what's going on? Good to see you. Force of One is in here. Good morning to you. Taryn, blessed day, everyone. Magnus is here. Steve Wright, all the way from Santa Barbara. Appreciate you being here, Steve Wright. Beautiful place that you live. Francis Powell's in the house. Hello, all. RWA tokenization is part of Agenda 21. Own nothing. Right. Taryn, you're always ahead of the game. You know what's going on. You got your ear to the ground. And that is a really good sneak peek at what I'm going to share. Hexonium's here. Richard Hart also says anytime blockchain touches the real world is no longer trustless DeFi. Seems like RWA to me. Well, what's interesting about that is, trustless yield, and we'll get to this. There's criticism of just about anything. But at the end of the day, who's amassing the real world assets, right? One of the big criticisms, if you saw the recent debate that was done by Crypto Banter between the gold guys and the OG Bitcoin guys, they made actually some really good arguments related to, the speculative nature of things and the lack of backing. And so the question is that backing going to be on our terms from a DeFi perspective, or is it going to be from a centralized perspective? And I think that the best illustration of this is the logo that I put in the thumbnail, and that is PDI, the idea of a truly decentralized stablecoin. But we'll get there. We'll get there. We got plenty of time. Mobius, what's up? Matt time. Hope you're well. Hope you're well. Glad to see you. Thanks for being here today. Please share this out and let's get into the content. So I just want to share this news story. It literally came out yesterday, so it is very relevant. And we'll start with this. And this is our friends over at BlackRock. And of course, I say that facetiously because they're not our friends. But let's take a look at what BlackRock is reported as of yesterday. BlackRock, Ondo, Superstate, the biggest movers in the RWA sector in Q1, catching up on the biggest news from the real world asset space. We're going to define what a real world asset is and how tokenization works in a second. But let's look at this news story from yesterday. Real world assets are one of the fastest emerging sectors in crypto. In essence, they're traditional financial assets like treasury bills that have been tokenized to interact with decentralized finance protocols. Okay, we'll see about that. RWAs allow for the blending of traditional finance with blockchain technology, enabling broader liquidity and innovative financial products. Broader liquidity and innovative financial products. The previous quarter saw the RWA market grow by leaps and bounds. Tokenized treasury bills, including BlackRock's USD Institutional Digital Liquidity Fund, Superstate Short-Term Duration U.S. Government Security Fund, and Ondo's USDY, grew by an impressive 41% to nearly $1.3 billion, driven by significant institutional interest and innovative product launches. Let's recap the key developments and trends in the sector. So, I guess what I'll say to you is that the real world asset world is ultimately kind of a $10 trillion opportunity. And that's what BlackRock sees. And of course, what are they doing? So, BlackRock, as not being our friend, right? So, let's keep that in mind. BlackRock is not our friend. And so, let's talk about what they're doing. And Taryn understands exactly what they're doing. So, there's all these assets around the world. And we know that BlackRock, in a very generic way, has amassed basically, most of the ownership in the Fortune 100, maybe even the Fortune 500. So not only do they own assets when it comes to basically, stock and ownership in companies, but they also are going after all of the natural resources. They're going after anything that is value, right? That is perceived or seen as valuable. Why do you think so many of these big players are trying to amass so much of Bitcoin? For control, right? You amass this and you control it. Well, the same thing is true. Why do people buy up farmland? Why are people buying up commodities? Why are people buying up real estate? At the end of the day, BlackRock's goal, and there's many people that are in this RWA space, is they basically want to be the gatekeepers of essentially tokenization. And they want to basically get to the assets first. Okay, so this is very important. They want to get to the assets first. And they believe that this is essentially a huge opportunity for them to not only grow, but essentially be in control and make the fees, if you will, by making the market in tokenization. And so they made a huge investment in a company called Securitize. And we're going to use the definition from Securitize because they basically, provide this education of what is an RWA. So let's take a look at that right now. This is the company that BlackRock and others invested in, and this is their mechanism by which they're going to tokenize real world assets. So let's take a look. Tokenization process. So we're going to walk through this real quick. This is securitize.io. This is a big company. They got a 47 million round of funding from BlackRock, and this is BlackRock's choice for how to tokenize. So the tokenization process, and this is what it is. So what is tokenization? Tokenization is, in simple terms, it's a process of issuing a digital representation of an asset on the blockchain. So this is a real world asset that exists. So in this, picture here, it shows real estate, fine art, loans. It can be so many different things, commodities. I mean, and you'll see that here. It involves converting the ownership of an asset, such as a piece of fine art, a commodity, or shares in a company, into digital tokens stored on the blockchain. The token represents the asset and is used to track and transfer ownership of that asset. Well, we know how easy it is to trade and swap these things, but at the end of the day, they want to basically control the market, right? We know that one of the it's not the gold that was the value, it was the picks and the shovels. And that's what BlackRock's doing. They basically want to be the ones tokenizing everything so that they can control the trading of it. Tokenization also provides access to entirely new financial markets, allowing assets that have historically been siloed in disconnected environments to exist in a common space. And that makes sense, right? The fact that you have it, it becomes much more easily traded, that value. And essentially, the theory here is that it's backed by something real. And what was the core backing? Well, the currency throughout history has generally been made out of precious metals. And if you think about that, the very nature of the coin being made of gold is its value. And this is essentially just an extension of that. Taking these proven real world assets and taking the ownership of those and tokenizing those into something that's tradable. And, that's obviously the goal, right? It provides entirely new financial markets, allowing assets that have historically been siloed to be in a common space. Ultimately, tokenization aims to bring efficiency, liquidity, and accessibility to traditional, previous illiquid markets. And of course, whenever I see these accessibility terminology, I'm always like, okay. So what you're trying to do is you're trying to make it easier to trade this value. And in the process of owning the trading, you make the money and you have control. So, what are real world assets? The term real world asset refers to tangible and intangible assets, including cash, real estate, equities, artwork, and bonds, or simply put, anything that has value due to its utility, scarcity, or demand in the real world. Okay, so anything could be tokenized. And that's the premise of real world asset tokenization. And if you do any research on RWAs, you know that this is the big next move. And I don't mean in this cycle, in this next bull run. I mean in the next 10 to 20 years. Ultimately, this is the consolidation of all of these assets. And they can't own them all, but I've engaged with some people who have significant assets. And when I mean assets, I mean billions of dollars in physical assets. And BlackRock is all over them trying to get access to tokenize them. Why? Ask yourself that question. These assets are part of a traditional financial markets and are regulated by various government agencies and organizations. In the past, only the truly wealthy could afford to buy high value real world assets like investment grade artwork and real estate and use them to diversify their portfolios and protect their wealth. The other thing to keep in mind is people like BlackRock and regulators really like this. I don't know if you know this, but artwork is really one of the historically used objects, if you will, of value or stores of value for those who want to do money laundering. And so there's a whole effort here that they don't talk about, which is taking these things so that they can track them. And I'm not saying that, money laundering is a good thing, but what I am saying is these things historically have been used that way. Gold is a great example. You don't know, you can just melt it down and restamp it. And so there's been a lot of people who have used these things to basically erase their historic ownership. And so another part of this is the regulatory component of this, because we talk often about central bank digital currencies. Well, this is the key to get all of this value from these real world assets so that everything can be tracked and traced. And, you could make a case that some of that is good. But on the other hand, do you want to be tracked and traced? Because ultimately, the dystopian future of this is ultimately that it's consolidating banking down to very, very few people, meaning central banks. And this is literally a money grab for control. And so this whole tokenization of real world assets is up for grabs right now. And it's beginning and it's worth at minimum 10 trillion. And that's why folks like BlackRock and the big boys are going after this. Okay. These assets play a pivotal role in diversifying investment portfolios, offering stability and serving as a hedge against market volatility. With the growth of the digital space and the increase in use of blockchain technology, more and more people are gaining access to real world assets, which is opening up new markets to created through tokenization. This is trying to sell you on the benefits of doing this. So, what are the benefits? Enhanced liquidity, accessibility, and inclusivity. I've heard that before. Transparency and trust, efficiency and cost reduction. And they should add another one: control for those who centralize these assets. Okay. So, you can go look at securitize.io. You can read this and learn more if you want to. There's all kinds of information on this. But I think that it's important within our community to talk about this because this is actually the mechanism of our enslavement. This is the digital function of our enslavement. So I'm going to hard stop right there and say this. We together are building the alternative financial system. So here's the vision. Richard Hart says, what? Let's create our own fork of Ethereum called the PulseChain. Let's make it properly decentralized so it can't be shut down. And then let's build infrastructure that vertically aligns it. Okay, stores of value, all kinds of different things like exchanges and whatnot. And then all these builders, right, that are building all of these infrastructure tools. And then what's missing? A truly decentralized stablecoin. Most people don't realize this when they're chasing meme coins. They don't realize that actually the battle is over the stables. And the stable coins themselves are ultimately what is going to pay the last mile to ultimately the retailer. And so think of yourself as someone who, you might trade crypto, but you have to eat food, right? And where does food come from, right? This is seed from the ground. So it has to engage with ultimately, because you can't survive without food and water. And if you think about this connectivity to real things, what do you use the gains from crypto for? Typically, you use those for surviving in this world, right? You sell your crypto, you go to fiat, and then that fiat buys you groceries. It seems really simplified, but it's true. You cannot live without these things. And so to say that we can only exist in this digital environment is actually very naive. We exist based on basically about 3 days you can go without water. And so we have to understand that there is a connectivity and there's a lot of power in connecting these things digitally. Well, we're not talking about that in the PulseChain community. We're not thinking about it. And that's why I bring this to your attention. This is very important. And this is the commitment I'm making for the next 10 to 20 years is I realize not only the opportunity that exists in tokenization of real world assets, but the calling on my life to unlock global generosity means you need to be in abundance. You to be in abundance requires that you have an ecosystem that is an alternative to this one that is seeking to enslave us. Okay. So we've understood this. We've got two sides of the spectrum, the centralized players who are mad dashing to tokenize real world assets. And then us, we're kind of looking at each other, fighting, shooting each other in the foxhole and not realizing what's happening right in front of our eyes. And so I'm going to ring this bell today. The focus on us tokenizing real world assets so that the assets are in our control and are brought into liquidity in our system. Because if you just think that this doggy coin or this butt token or this whatever it is going to hold up long term, you're mistaken. That ultimately it's going to have to lead back to real value. Because if we actually are going to create a world in which the abundance is there, it has to be sourced by things that are abundant, right? So we need to be able to connect them to real things. And so we're amassing value right now, but a lot of what I see, and this is the kind of axe to grind that I've got with the current culture within the PulseChain and in crypto in general, is somebody that has a paid group, gets a group of people together, they connect with projects who want to make a big splash. They basically collude outside of the system. If you're paying them, you're on the inside. The new project owner tells them, here's when we're going to launch, here's the situation. And the group agrees, we're going to all buy $1,000 on second one. I'll be on the, I'll be digitally connected. I'll be on Zoom or a phone call with the person who is. And when they push the button, you're all going to know. And then we're going to, as people jump in, it's going to hit the markets. All of those things are going to be seen. And those that are late, we're going to take from. And so we're going to build up all this. And this is the anatomy of a pump and dump. And that's what it's done. And what's interesting is I don't have to go through the list of things that we've gone through in the last, let's say, 2 years. What is the hottest thing? I mean, you can make the list, and I'm not going to point them out because I think it's rude to do that. But at the end of the day, there's been something. What was the flavor of the month 3 months ago, and 2 months ago, and 1 month ago? And what is it today? And there's always something new and always something shiny. But the problem is we're just recycling the money that's here. And the people that are not in the inside, basically, we're just taking from them. They're nameless and they're faceless, but it's just as bad as this leverage trading stuff, right? Richard talks about how the person on the other end of the computer is the one that loses and you win. Well, you like it when you win. But the future is really about consideration of others in addition to yourself. What if we all won together? That's what I'm talking about. And that's not real sexy to people. They don't like to think about that. Well, we have to be practical and tied to real value. I'm hoping that sensible people who hear this will go, you know what? It's about time we had some adults in the room, because there are some folks in our community that have absolutely no concern about stealing from others in the community. And they would just say to them, they're just stupid. No, they're just late. They're not paying you. And that's the unfortunate part, because what ends up happening is if you see that, then you're like, all right, who do I need to pay? I want to get mine, right? I want to get in on this and take from the noobs. But what is buy low, sell high? What is selling the top? If not the excellent liquidity of those who are late. That's not the system that I want to be a part of or support, right? You're there because, hey, I saw these gains, but where do those gains come from? So fundamentally, things are shifting, and that's why real world assets are really interesting. So I'm going to give you a scenario. Let's say inside of the PulseChain, we owned, just keep it simple, $1 billion worth of gold. Okay, this is an illustration. If we had $1 billion worth of gold, and you could say, there's that gold, and it's proven, and it's audited, and it's it's there. What if someone who owned that $1 billion of gold tokenized it? And they said, you know what? I'm going to bring that into Pulse X. I'm going to bring that into as liquidity. I'm going to bring that into 9inch. I'm going to bring that into, just insert your favorite DEX in the PulseChain. Part of the issue that we run into is everybody wants the big boys to come in, but the big boys are not interested in coming into DeFi in general. And why? Because there's not enough liquidity and it's not locked. Think about this for a second. If you're going to invest in something and everybody's like, trustless yield, it's the greatest thing since sliced bread. I agree, it is. But the problem is, if you don't know that the liquidity is going to be there, why do you risk a lot? It's paper value is nothing. It has what you are worth on paper is irrelevant. It's, can you get out? And if you can get out, is there proper liquidity with the least amount of slippage? And sensible people that are real investors, they like trustless yield, but you don't have enough liquidity and it's not locked. I don't have a lot of confirmation. And then, look at on the other side of the spectrum, we've got a group of people who are playing the liquidity game to make money. What do? It's market manipulation. And fine, you're fine with that because you're winning. But we have to fundamentally look at these tools. And one of the things I talk about on Fridays every week is the nature and character. You are animating the tools in a certain nature and character. So if you're leading a group and your whole group is about colluding with other people to manage and manipulate the market based on LP, congratulations. But it's a zero-sum game because you're taking ultimately from somebody else who's not as informed. That's essentially it. Now, there are some dynamics in that I think are pretty interesting. But I think there's a fundamental thing at the core of this that we need to address. And that is ultimately that we're just kind of passing money around between us. We need to bring in a tremendous amount of new liquidity into DeFi if it's going to be a viable alternative to this juggernaut, which is a centralized authority. So, what's the plan? How do we do it? What's this all about? How do we take the pulse chain to the next level? Well, we own the assets. Bottom line, we buy the assets. Here's a really interesting story that I think is huge. Back when I was a younger man, before crypto, do you know where all the gamblers were? All the gamblers were in the penny stock world. Do you remember The Wolf of Wall Street? Did you see that movie? There's certain scenes I can't forget about that movie. A matter of fact, I am a red blooded American Texan. But what's interesting about that movie was that's where the gamblers were, right? That's where the hustlers and the charlatans were. And if you think about it, the penny stock world in Canada, Canada has a lot of natural resources. And Canada decided that they were going to make it really attractive for Canadian investors to invest in Canadian natural resources. And so one of the things that they created is they created a um, basically a national instrument. And that national instrument was really ultimately for valuing mining assets. And in this case, let's use gold as an example because it's the most understood. It's called an NI 43101. And that's a national instrument that is essentially how you value gold in the ground. And geologists and people that are exploration companies and all of this stuff will utilize this national instrument, which has to be certified by a certifiable person, that this is the value that's in the ground. And that's what they would take to the public markets. This is prior to crypto. And so what would happen is they would say, all right, if you can get access to this asset, so let's say this gold mine that has potential of X amount of billions of dollars worth of gold, we're going to give you this discounted rate of value of what's in the ground, and we're going to allow you to take that to the public market. And that was on the Toronto Stock Exchange. And those companies that did this, these were what are called the junior mining companies. These are the companies that um, basically there's an agreement in the laws of Canada that if you're a guy, let's say you're a lawyer or a doctor or somebody, and you got $50,000 laying around and you put it into one of these, Canadian natural resource companies that's doing mining and you lose your shirt, well, they'll let you write that off to the tune of 135% of its value. The same thing exists in the United States in the tax code as it relates to drilling oil wells. So these are incentives for people to invest in these things that protects them from the downside. And it's really a tax break or benefit. But what's interesting about that is it stimulated a lot of investment. And so prior to crypto, it got people in a frenzy. And so if you owned an asset within the natural resource world, let's say gold mining, and you are finding a new asset, you found this, new gold strike, you would immediately create a public company and you would get essentially on the Toronto Stock Exchange, and people went bananas for it. And those were the penny stock, penny stocks, right? This was the OTC, the pink sheets. And of course, The Wolf of Wall Street was written. That movie is really about that time. Well, guess what's happened since then? A little thing called crypto. And so all the degenerate gamblers that were they've always been around. They were in the penny stock world. Guess where they are today? They are in crypto because they're always going to be around. It's the casino, right? You want to make the big gains. And of course, you've heard the pump and dump thing comes from this, speculative market where somebody's like, yeah, we found this great, gold mine, man, and you need to invest in our stock and pump it to the moon. Sound familiar? Well, oh my gosh, it's the same thing over and over again, okay? But what's happened is that here we sit. Gold is at an all-time high of $2,300 an ounce or in change. And guess what's happened to those companies that have really, really valuable assets? They are absolutely decimated because their source of funding, the degenerate gamblers, are gone. And they are in crypto. So that creates a significant opportunity. And so what's happening right now is BlackRock and all these big boys are going around to amass for pennies on the dollar these natural resource and assets. And they are essentially tokenizing those things and basically going to buy up the world. Now, will they own them outright? Maybe, maybe not. They might own the companies that own them. But if you understand what's happening, you realize, a lot of people are just like, man, we just need a place called Hexaco. Okay. We need to get a little bit more sophisticated and recognize that there are some really big time players in our space. But we have to be able to have the assets in order to bring that liquidity into DeFi. If we're going to have the alternative financial system, we not only need a layer one, stores of value, we need DEXs, we need wallets, we need fiat on ramps and off ramps, we need a truly decentralized stable coin like PDI, but we also need a massive amount of new liquidity that comes from the tokenization of real world assets. Are you paying attention? Do you hear what I'm putting down? That's what I'm focused on. That's what our team's focused on is how do you tokenize the world? Think about Texan or Ophir. This is a group of people that have trust. We tokenize those the groups of people who have trust. But still it's a speculative asset, right? More buyers and sellers, the price goes up. So how do you bring in liquidity? Well, guess what? It's a narrative. Richard said it many times. It's a shared fiction. Our made up internet money is better than the government's made up money. Pretty interesting, isn't it? It is very interesting. And so I'm going to pause for 1 second here. I'm going to get into the chat, but hold on 1 second for me. All right, I'm back. I needed some help from my buddy Ray. So let's talk about this. What is the opportunity that we have and what does it look like? Well, let's back up. Let's back up to the last bull run. Remember when, Richard announced the Pulse chain and then people started creating projects? The first project that was created was liquid loans. I remember them very, very well. And because Richard did a sacrifice and raised $1.6 billion, what did liquid loans do? I think they raised $51 million. Okay. Okay, great. And then there was Mintra, and then there were a number of other things. Do you remember? I remember the God Whale, for example, putting in tremendous amounts of money. I think it was 10 million here and 6 million here and 2 million here. And it's amazing. That's just like one whale. And we don't know who that whale is, but that God Whale, why? Why did the person do that? And if you look at any of the God Whale wallets that we know about, there's, hundreds and hundreds and hundreds of millions of dollars, if not, multiple billions of dollars. Well, whoever that God Whale is, or whoever those people are, realize that, hey, we need to stimulate building of real infrastructure because without it, we're not going to have an alternative. So the thinking ahead. Do you think that the reason that, these whales invested in these things is because, well, I just want to, dump this token on the heads of the Pulse chain people? No, actually, I think it's an investment in the stability of the ecosystem. And you can speculate about who these people are, but at the end of the day, there's actually some reasonable, smart people that are in this community that recognize the fact that just having, just Hex is not enough. Even Richard recognizes that. The battle here is ultimately for the entire financial system. And so I see it. And I think one of the things in the ways in which I can contribute is to say, all right, how do we go about acquiring these assets for pennies on the dollar? And we that control the real world asset backing. So imagine a future where we have hundreds of millions, if not billions of dollars of real value that's tied to verifiable real world assets. And right now, there's a tremendous opportunity to be able to acquire those. That creates stability for our alternative financial system. And it's not in the hands of the BlackRock folks. But I think it seems like a really simple thing to say, well, let's create another DEX. Let's create this, protocol. We need those. We need a wallet. We need these things. But we also need someone who's going to bring in a tremendous amount of locked liquidity into this thing. Now, we like low liquidity because the number pumps, right? The price pumps. But at some point in time in the future, this is ultimately the new system. You don't go to fiat. You're using crypto. You're using digital assets. And ultimately, because you need to get food and water, you're going to have to go to a stable. And right now, USDC, USDT, all these are not safe, alternative, decentralized stable coins. And so this picture is not complete yet. But I want you to see it's getting there. But one of the things we have to have is we have to have it's not real value. And so everybody, I remember at the top was like, "Yeah, look at my balance. Well, what is the Hexflex about?" It turned into something real. It actually was a Lambo instead of just a number on a screen. But that's dependent on liquidity. So some people have done some great research on who made the most in Hex, right? So everybody talks about 10,000x in 623 days. But if you look at the on-chain data, there's some people that pulled out some big money. But what's funny about this is, I don't even know that it's funny at all. That money came from somewhere. It came from many of the people that came late to the party. So it's just the redistribution of existing value, but it's all representative of you and me and our creative ability because it has to come from somewhere. I mean, think about this for a second. Whether it be the ICO of Ethereum or whether it be the adoption amplifier of Hex, it started at some value that traced back to somebody that put in a proxy for their labor, which likely would have been fiat, and wired it to New York and got in on the ICO, extending value. It's just a bridge. That's all it is. But the brilliance of Richard Hart copying over the system state, he borrowed all of that liquidity from Ethereum by copying over the system state. And the miracle of this is it actually has a value. Look at WBTC on the Pulse chain. It should be zero. It's a copy. It's a direct copy. Why is it like at $200? What? Well, a wrap Bitcoin right now is worth what, 63,000? But the fact that it has any value is significant. Same thing with PDI, the same thing with any of these copied over coins. Having any value whatsoever is a miracle. Why? Because value is perceived by parties. We agree on this. And so if you believe it, it's real. That's how it works. Because what is this stuff? I mean, what is cash except paper that costs about 7 to 9 cents to produce, regardless of the denomination? And so it's just an agreement that we have. But the question is, are we going to get together and agree together? Well, I want to agree that the vision should be one of an abundant future in which we're actually leveraging real value and bringing a scenario in which, not just few of the smart, connected people win. Well, how do you do that? We have to bring in a tremendous amount of new locked liquidity into DeFi and specifically into the Pulse chain. And that's what I'm going to do. That's what I'm planning to do. And if you're interested in doing that, you need to DM me and let me know because it is really important. We have the opportunity to pick up assets at very, very cheap and value them at their actual value. The problem right now with these assets is all of the gamblers have gone to crypto and they're not in the penny stock world, and the access to the capital markets is gone. You may be a publicly traded company and you might be sitting on billions of dollars worth of, in-ground assets or value or natural resources, but no one cares because they're all chasing a frog or a dog. This is what opportunity looks like, folks. But imagine doing something that's beneficial for you financially, but also beneficial for another person in our community. What I mean by that is we're actually building the alternative financial system. And some people won't get this. They'll be like, oh, okay, yeah. Fine. Everybody's got a calling. Everybody's got a connection. But this is the focus. And so really this stream for me is a declaration to say, this is where we're going. we're going to find and bring a tremendous amount of liquidity. And you're going to be happy about that because you're going to actually be able to get out of your crypto if you need to get to fiat, for example, because there will be enough liquidity. And guess what will happen when you have a lot of locked liquidity? Other people with bigger money will be attracted to our ecosystem. But it's just like anything. Without a decentralized stablecoin, it's kind of tough. Without fiat on ramps and off ramps, kind of tough right now. Without wallet solutions and dexes and all these things, it's kind of hard. Without lending protocols and everything, so you never sell, kind of hard. So that should give you some perspective. We're a year old, folks, coming up on a year. We got the Pulse conference coming up that Maddie Allen has put together. That's going to be exciting, marking this year. And then you got all the people who are like, yeah, we waited 2 years for the PulseChain, and now we're a year into it, and it's below SAC rate. Whatever am I going to do? Well, you're going to focus on things that actually build a future, because my outlook isn't 18 months, folks. It needs to be 18 years. But here's the thing: they are out there diligently with capital working against us. And the whole point of this is, you think you're enslaved now, get ready, because you have no idea what's coming. Because what ultimately will come in order to get the next, so I'm going to run a dystopian future for you that is very probable. The next public health crisis that is global will happen because it's essentially planned to happen. And what do? Well, you've got AI is going to take your job, right? You got all these things that are coming out. You need universal basic income, brought to you by the central bank. Well, that's the whole thing, right? I mean, I think about Neo, right? He was plugged into the matrix. He didn't know he was being used as a battery. But if you think about what this whole thing is if they can control the money, all the smaller banks are going to die. It's going to be consolidated and centralized, and then it's going to be digital. And then there's going to be tandem agreements between the central banks, so that you may call it a digital dollar, or you might call it a digital yuan, or whatever it may be. But at the end of the day, there's going to be an agreement. And we're going to end up with, essentially by proxy, a one world currency. And that'll be traded around by very few people. And that is really exciting to them, because then they can control things. But what will happen is you'll have to have an approved wallet. It will not be a self-custody wallet where you're not KYC'd. No. This will be a government one that's tied to your social credit score and everything. And so what will end up happening is every transaction will be seen, and then AI will be analyzing it. And it'll say, hey, this group of people that we don't like, you don't need that big of a house. Why do you have more than one car? You know that car is an internal combustion engine? We're not okay with that. And what about these guns? And hold on a second, you're eating too much meat. You know that's not good for the environment because of global warming and cow flatulence. You see where this is going? And then it's like, well, we want to make sure, instead of you having to file your taxes, we're going to make it easy on you. We'll just take it. Oh, and by the way, when we ration this UBI to you, it's good for 90 days. And if you don't use it, it's gone. Kind of like a gift card, but it's good for you. We have to have an alternative financial system. And this is what Richard's been talking about. And I'm just here to try to put color commentary around the vision that Richard's had. But I recognize that no one's working on real world asset tokenization to bring a tremendous amount of locked liquidity into the PulseChain. Nobody. So I am going to. If you would like to be a part of that, there's a good win in that. But you know what? It's not the win of some inappropriate meme token. It's real value. And there are, I think, some reasonable people that understand that that's actually the real long-term future if we're going to have an alternative financial system. And, I think it's worth fighting for. And that's where freedom and sovereignty comes in. That's where Freedom Swap comes in. That's where Texan comes in. Folks, the prevailing wind is one of independence and freedom. And like every good movie we ever watched about the resistance and the rebellion, that's us. So I think that Brandon from Rags to Riches is Kylo Ren. No, he's not. He's Luke Skywalker, folks. He's a red Luke Skywalker helping battle for the resistance. Folks, this is a tremendous opportunity, but we got to think differently, and we got to work together. And what's sad about it, and the conviction that I have about crypto is that I don't want to steal from people. I want to build new value. I want to bring new value in. I want to bring new people in. And not just the way it happened last time. No, let's create new models. But the big boys are already doing this. And that is actually the enslavement. But if we don't have our own value and we don't have our own resources, but I think that this is something that ultimately catches on. Because if you're somebody that has resources and you have assets, why not tokenize those on the Pulse chain? Because I think it's going to be the only decentralized layer one that exists out there, truly decentralized. Maybe Cardano, but those are really the only two. Why? It's because the leadership is not going to fall for essentially being bought out, right? Not going to compromise their principles. Okay, so that's what I have to say today. I'm going to go into the chat. You got questions or you doubt this or whatever, let me know and we'll talk about it. But folks, I'll tell you what, we have to grow up and stop fighting with each other. And it's actually no wonder it's discouraging if you're on Twitter. It's stupid is what it is ultimately. And what's funny is everybody's just chasing the next shiny thing. Now the thing that's popular right now is just launch another coin. Just launch another meme coin. And it's funny. I'll go into Dex Screener. I'll look at the top. The majority of the value in the first hour is eaten up by bots, by people that are snipers. And so, yeah, it's fun, right? It's almost like, yeah, it was fun. It's like a weekend trip. Yeah, we had a great time. And then the person that was hustling that meme coin for all that time, you never hear from them again. You never hear about that meme coin again, whether it rugs or not. And it's like, oh, we're on to the next thing because we're essentially using the hype cycle. And that's the degenerate gambling. That's the casino. If we're going to have an alternative financial system, it can't be a casino. And everyone that has any sense knows that the casino isn't where you make your money, unless you're a good poker player. But that's a whole other story. Tokenizing goats of the future. Fast Abdul, you're always the contrarian. I appreciate you being here. Academaciated, welcome. Glad you're talking about this, Matt. It's insanely important. Taryn, thanks for acknowledging that. Ryan Hungate, who is one of my first friends in Hex, selling $1,000 of crypto can sometimes cost $200 in fees to get from on-chain to the bank. Not exactly efficient and present and a very difficult problem to solve before we can thrive. Isn't that so true? I mean, if you've ever taken any decent amount of money out of crypto and then gone through, let's say, an off-ramp like a Coinbase, yeah. They don't want you to take that money off into the real world. They want you to just recycle it and get the fees. That's the whole point BlackRock sees. If we can tokenize these assets and make these real world assets have value, and it's really just perceived value, by the way, right? What's the value of art? What's the value of these things? It's all perceived value that they make money on the trading of it. I agree, though, Ryan. You're absolutely right. We have to have an alternative financial system, but it's going to have to be based on something of substance, something that's real, or at least that's perceived as real. Andretti, I think only around 30 people are making money on PulseChain. Exactly, right? And then they just rinse and repeat. The hottest thing has always been Hex. Amen to that. Well, that's what got us here, right? You dance with the one that brought you. Menta Raygun says, no PulseChain. Why am I still 75% down on PulseX after 3 years? Exactly. It's such a challenge. I mean, and that's the thing. That's why we got to focus and back out sometimes and say, okay, did I put all my eggs in one basket? Right? Do I think that the Pulse chain is going to do well long term? Absolutely. Do I think that Richard's going to peg PDI? Absolutely. It's going to be a monumental time, and people are going to go bananas. But I'm not promoting that you buy PDI. You know what's interesting is it's almost like the things that are meant to succeed will succeed. The only one. Crypto Heartbeat rules. Thanks, man. Quinn's here with the love. Grifters galore. Remember to like and subscribe. Hex Monkey, another one of the good guys. Powerful message. Might need to watch it again to absorb it. Thanks, Hex Monkey, for being here. Appreciate you. What's hard is that we need the separation from fiat by using crypto for day-to-day items. But yet every time we need something, we go from crypto back to fiat and we get feed to death, losing value. And that's the thing. There is a future, but you know what it's going to be dominated by? It's going to be dominated by who's got the stable. So let's run an example. My dream scenario: Texas becomes an independent nation once again, the Republic of Texas 2.0. And retailers within that world, the really servant-hearted leadership of the new republic will say, you know what? Let's embrace DeFi. Let's look at and promote a stablecoin, let's say a PDI, for example, and let's make and provide incentives for retailers within Texas to be able to utilize this stablecoin. And you can obviously, if you're a sovereign nation, make some decisions, right, that basically support these things and reinforce them so that people have confidence. And a lot of times when that confidence is there, for example, like with El Salvador and Bitcoin, you have adoption. But if we don't have a stablecoin, see, anyone that has ever run a business that has essentially any type of inventory they have to hold, they're really, really concerned because that comes out of their pocket, right? That represents money to them and they want to turn that. So the cost of goods sold is really in in that inventory. And so if you buy something, everybody's like, yeah, Hex is going to be the next, world reserve currency. It's not, by the way. I just want to let you know. Why? Because people that are at the end, the last mile, the retailer, they can't accept something that could be volatile to the tune of 20 to 40% in a day. They want to be in something that, all right, this represents a dollar because I got to buy I got to buy the inventory, or I got to buy the natural resources, or I got to buy whatever. So it just has its place. But that's the future, is that we ultimately get to the point where all of this money that you stored up as a store of value and you're like, man, and you're bummed about now, it's real, folks. But it requires this infrastructure in order for us ultimately to agree to trade in this crypto. Because let me give you an illustration. I'm not in favor of it, but fundamentally is the point. A group you're probably familiar with, PYUSD. It came out well over a year ago, and this is PayPal's USD coin, right? So it's a centralized stable coin. Paxos is the one that backed it. It's backed by the US dollar fiat, and PayPal has created this. It's PYUSD. And their whole point is we have 600 million users. We have all of these retailers. And essentially what they've done is they created an ERC20 token on the Ethereum blockchain. And so you could today take your Hex, EX, for whatever that's worth, swap it to PYUSD, and buy something directly online without going to fiat. That's the whole point, right? That's where things are ultimately going. But what is happening right now is they're trying to clamp down on anything DeFi so that ultimately, I think their de facto, which is taking over Circle, for example, is that USDC or some other, dollar-backed stablecoin that is hardly stable. If you remember, they only have 25% of it in actual fiat. 75% is in dollar equivalents, which are derivatives, right? These are like treasury bills that get yield. That's how they make money. And so it's really not what you think it is. And unfortunately, they want to kill everything else so that they control the ultimate currency that the majority of people want to hold or transact in, and that's a stable coin. So there are no magic bots that make money. Well, there are a couple, Fast Abdul. I have a feeling you know which ones those are. But yeah, there's some sniper bots. Whatever they got figured out, they got it figured out, man. I'll tell you that. Um, the people that are doing it in an analog way are the ones that have the paid groups. Yeah, yeah. And shame on you if you participate in that stuff, by the way. And I don't mean all paid groups. I mean the ones that are just trying to take from the naive. Red Squall, oi, oi to you. Black Eagle companies are posting fake jobs to trick shareholders into thinking that there is growth so that they can sell their shares. That's what's happening right now. And that has happened since the beginning of time. What was what is the common phrase about a gold mine? It's just a hole in the ground with liars on top, right? That's essentially what it is. Yeah. People have been, this is the whole thing. It's, yeah, it's tomfoolery. Crypto Vince, what's going on? It's so great to have you here. We're truly close to the end times. The tech is there for the mark of the beast. We must resist, and real crypto will help. Well, and think about this, the mark of the beast, right? This is something that biblically it says that if you take this, basically, if you don't take it, you won't be able to buy and sell. It's interesting that it's tied to economics. But you think about this, the tools of crypto are just that, tools. Money is a tool. How do you animate those tools? What I'm trying to say is it should be in thoughtful consideration of each other. We should be concerned about the person who's new. We should be concerned about the person who's coming in and putting in money thinking that they're going to get a 10,000x and being lied to because somebody else is just basically using them as exit liquidity. We want to solve that bigger problem. That's why we need to own the assets, in my opinion. Telegram DMs, Taryn, I will. Nico, late to the stream. First one for ages. How things are good. Thanks for being here. We have 305 people here, and most of the folks that are watching this are actually on the X platform. So if you're on the X platform, I want to say thank you. Two, I would love for you to subscribe on the YouTubes. But I'm looking forward to when X actually provides the real tools and competes directly with YouTube, because I will jump ship and go over to X. But 308 people is a great turnout for today. I appreciate you being here on the Pulse. My name is Matt. This is Crypto Heartbeat. Let's take the PulseChain to the next level. Real world asset tokenization. We can do it. It's a big idea, but we got the capabilities of doing it. Folks, do not mess with Texas. Take care, everybody. We'll catch you next time.